Well, our next speaker is going to share his insights on capitalizing on the growth opportunities in the fragmented ASEAN region. Please welcome onto the stage Mr. Yash Sankrityayan, Managing Partner of Jungle Ventures. Please welcome Yash.
Good morning, everyone. It's great to be here. Such a great event. In the first 5 minutes, I already learned something important, that I need to wear slippers in hotel rooms here onwards. So it's off to an extremely insightful start. I have to thank Cyberfort. It's a beautiful campus, and it is such an important element of providing startups and founders with real estate, with infrastructure, with government support, as well as policy support. These things are extremely essential to the growth of technology and innovation across the world. I know because we're based in Singapore, another big financial and business innovation hub in Asia. We've ourselves benefited from actually being based in a small campus like this way back when we started as a firm, as well as capital support from different government agencies, as well as policy support, which has made Singapore sort of the hub for all of ASEAN. That is what I'm here to cover today. Anson led off with sort of some beautiful insights at a global macro level, as well as the venture level. Happy to cover a little bit more on Southeast Asia. That's the focus. The reason for this topic should be relevant as well because we've already seen meaningful success from Southeast Asia doing business with Hong Kong and China, and similarly the other way around, but also with founders who've looked to expand to go after a more regional and pan-Asia market. And often that can be done with Southeast Asia as a starting point because of many similarities, primarily distance, language, culture, and so on. A quick one about us as a firm and about myself, which will help add some context to the session. I've been in venture investing for about 10 and a half years now. Have had the pleasure and the honor to be closely involved with 5 unicorn investments so far, 2 across India and 3 across India, and then the other 2 across Southeast Asia and global markets. Happy to bring our learnings across all of those today. We as a firm's about 14 years old now, manage $1 billion USD in capital from global LPs. We are always a lead investor. We make fewer investments, but we invest a larger amount of capital in those investments. And therefore, you see more of a focus on ownership, but really supporting the founders through multiple rounds of capital. 4 unicorns in the portfolio today, another 4 companies which are almost there and hopefully should graduate to that stage in the next couple of years. Aggregated portfolio value of $16 billion across all of these companies we have invested in, with about 700 million of capital so far. We are based across the key markets we invest in, so 45-member team in Singapore, Bangalore, Ho Chi Minh City, and Jakarta. And one thing which we are very proud of, what you see in the bottom right corner, 1 in every 2 women who works in our 45-member team, 1 in every 2 people who works in our team is a woman. Just as a quick headline, especially in light of all of those declining trend charts which you saw, the fundamentals are still very much there. And this is an aggregation of India, Southeast Asia, but really the most emerging part of Asia. 2 billion in population, $6 trillion in accumulated GDP, $1.5 billion mobile internet users. 500 million of them are middle class, and that number has rapidly grown just in the last 6-7 years and continues to grow. 50 million small and micro enterprises who are still adopting technology, still modernizing themselves and becoming a key contributor to these economies. And that just means that the amount of growth still to come, which may still have its bumps along the way, there will be years of low capital availability, there will be years of low technology adoption, there will be years where AI seems to upend everything, but at the end of 2024, it hasn't upended that much. And I think the key thing which founders and investors have to focus on is the true underlying opportunity and the size of that. All this put together makes Jungle Ventures coverage market the 4th or 5th largest economic entity in the world. And we are quite proud of it. I'm sure there's been bumps along the way. There'll be more to come as well, especially from a macro perspective, from a capital flows perspective, from an exits perspective. But what we'll like to cover over here is what we see as positives about the market. And in order to do a good job of it, which is why we have 4 offices in our key investment markets, we source locally, which is why we are selective in investing. $6 trillion economy is quite meaningful, but it's still not huge. The US and China are much larger than that, which is why we're being selective in our investments and how we go about them. And we help our companies scale regionally. Because once you've proven and won your city, your product, your country, there is no reason why you cannot also go regional, because you've built that whole value chain which can help you capture a larger swath of the market. This is something which is hopefully today useful also to Hong Kong and China-based founders and investors. As I mentioned, 4 unicorns in the portfolio, another 4 companies in that $500 million to $1 billion range, as well as another 9 to 10 companies which are hopefully getting there soon. This has taken 10, 12 years of effort, but we are more than happy and proud to keep going at this. Now to the topic at hand, which would be more interesting to you all, the Southeast Asia market. Let me jump in. The big numbers are well known to most of you, so I'll brush through this, but really 600 million in population. One country which is $1 trillion plus in GDP, another 3 or 4 countries which are in that 300 to 500 billion range. So not small by any means. The populations of each of these countries, especially Philippines, Thailand and Vietnam, also in that 70 to 100 million range. Small drop compared to the Philippines, compared to China, but a massive population compared to most of the rest of the world. This, I think, has been what has driven most global capital interest, especially through this year, as people are rethinking their Asia strategy, their China strategy, which is macros have remained quite stable. Both GDP growth has been resilient and is expected to be that way in that 4 to 5% range, but inflation also never got way too out of hand, and therefore central banks have not had to increase interest rates to such a high extent that the economy started to crater. And this is something which global investors appreciate quite a lot, because they would need line of sight for the next 3-5 years. Another thing which seems to be the theme of 2024, elections across so many key markets across the world. But India had its elections in April. Indonesia has had its elections earlier in the year as well, and have recently announced their ministries. Largely policy and governance continuity with certain changes in sort of the ministries, which also gives a good visibility for the next few years to come, and therefore helps investors and founders choose to commit and commit for the longer term. Covered these things already, but this is a global comparison. And as you can see, both the combination of GDP growth but also inflation under control makes India and Southeast Asia both quite interesting, Southeast Asia especially so. And also from a future outlook perspective, aging populations, reducing working populations, income growth already reaching fairly high levels, these are starting to affect global developed markets quite meaningfully, not just in the West, but also across North Asia and ANZ. This is something which is still up and coming, both for India and Southeast Asia, and therefore we think the fundamentals are strong. We just have to navigate these choppier times in a better manner. This chart already Anson covered quite well. I won't go in much detail, but really the decline chart looks very similar to the rest of the globe. What we do want to call out is even in the highs of 21 and 22, a bulk of that capital went to really 8 to 10 companies which were raising mega rounds. The names, the Grabs and the GoTos and the like. And of course, they've reached a large scale. They were going after a much larger market, expanding into new product lines. The rest of the fundamentals still remain quite stable, and that's why Jungle is continuing to invest. We've in fact deployed the most amount of dollars on an annual basis through 2023 and 2024, and we think 25 and 26 look quite similar. While the rest of the market is still warming up, we are jumping with our hands on the opportunities in play. This is because the digital economy, this is just Southeast Asia, has scaled to $200 billion in GMV and $70 billion in revenues. Most of this data here onwards is in the Google Temasek Bain report, which they publish every year. Very high quality report, very well researched. So, you can click pictures if you want, but you should go through that report. It'll give you a lot more updated insights. This is something which, despite all the gloom, despite all the questions of, is Southeast Asia too many small countries? Is it a big enough market? Will it ever be the next China? No, it won't. This still shows what the quality of market opportunity, but a good execution can achieve. Shopee, and they've grown 7x in the last 4.5 years, despite starting from a $14 billion GMV base. So they've grown 7x over that. And this is with COVID, this is with inflation running high, this is with consumer spending and consumer confidence running low. So this is really the size of the opportunity. Of course, they've had to spend a meaningful amount of resources and capital to get here. But this just goes to show that it is not all doom and gloom. Not all late-stage unicorns and public listed internet companies are struggling with the opportunity. They've all recovered quite well. This is a good example of the overall growth. The next one, Grab, which is often discussed in a somewhat negative sense because of the share price decline, has actually done quite well on improving its metrics. And they did have the issue of listing at a time where really it was a inverse correlation with their stock chart and the interest rates going up, as well as other things around valuations. But here you see few key callouts, lots of numbers on the screen. But even over the last year, they've continued to improve their revenue more than their GMV, which means they're continuing to still grow on the GMV front, selling more services and products. But their take rates of that, as they've started focusing on unit economics and profitability, have improved meaningfully across both of their businesses. Some of them growing on the revenue side in that, 11%, 15%, 20%, 30% on a year-on-year basis. And EBITDA improvement is quite meaningful as well. The other learning, and these stats get misused a lot because it's not a like-to-like comparison. We've just put here the last 7 years of VC funding versus the GDP of the economies which that VC funding has gone into. Southeast Asia still lags comparatively. Now, I don't call this like-to-like because, again, Southeast Asia is still 7 different countries. So this is to some extent aggregated data. It is definitely earlier in its technology adoption as well as startup scale perspective, definitely compared to a US and a China, to some extent compared to an India as well. But we do see that there will continue to be meaningful opportunity because of all the macro trends which we had mentioned. And the other learning, and this is the part which starts to get important to get right. You saw the chart with the GDP per capita. India is at $2,500 or thereabouts per annum. Southeast Asia overall is at $5,500 to $6,000. But if you are to remove Singapore, maybe also Malaysia from that, it also comes in that $2,000 to $3,000 range. Now, as you are going after consumer products, consumer services, maybe even SME and enterprise services, this is the part to be careful of, which there is a meaningful gap in the market to be served, but the number of people who are willing to pay the amount of money you would need to make on a per customer basis is still small and growing. And therefore, you have to be focused on what your market is. You have to be disciplined in going after them in a capital efficient manner so that you don't overinvest in giving out coupons and discount codes to try and change a customer who, once those coupon codes go away, just can't be a customer anymore. Many companies have made that mistake in the past, and hopefully we see less of that in the future. Not to say that the rest of the market is not a relevant market. You just have to cater your product or service at the right price point for the right customer segment. And this is why we have a regional thesis as a firm. We've seen that a millennial consumer is almost the same in any of these markets, including Hong Kong, including the key cities of China or India as well. They're used to Uber, Spotify, Amazon. They're used to paying for subscription products. They're used to paying for things which are better quality, better fit, better design, better sizing. And therefore, instead of going to a tier 2 or a tier 3 city within the same country where you started, we often ask founders this question, that we are happy to support you in your regional aspirations. Is the tier 1 city of another country a better fit for your next product or your next market? And that's something which I would say, especially Hong Kong and other regional founders who have that aspiration, once you've penetrated a certain number of customers or a certain revenue level in Hong Kong, should you actually consider some of the key tier 1 cities in Southeast Asia? The great thing about tier 1 cities in Southeast Asia, the greater Jakarta area, the greater Bangkok area, and the greater Manila area, each is anywhere in that 15 million to 30 million in population, the size of whole countries. Super dense, easy to cover, very obvious to build offline strategies around as well, which can support your online spending to build a more sustainable business. And this would be obvious, but Singapore is often in the news. Indonesia has been in the news a fair bit as well. But really, over the last 5-6 years, bulk of the capital has really gone to Singapore and Indonesia. Makes sense. Indonesia is the largest population base by far at about 250 million plus compared to the other 3 or 4 countries I mentioned, which are in that 90 to 100 million range. But the opportunity still exists there. And therefore, that's something which we as a more regionally oriented firm continue to focus on. For a founder and for an investor, it also helps provide diversification. You are able to diversify into different markets so that any future impacts from a macro perspective, consumer spending perspective, regulatory perspective, your market, your revenue streams, your business streams are a bit more spread out as you go along. And then finally, something which we've maybe all learned a little bit the hard way you look at the NASDAQ or any SaaS index or consumer internet index from end of 2021 to pretty much beginning of 2023, it was all the way down. We believe at least that not just investors, founders as well have to be much more valuation aware. This is just corporate finance, what you see on the slide. The pricing or the valuation evolution of any company can start on a price per user, price per GMV basis. Eventually, it has, as it aspires to a large M&A or a public markets outcome, have to be traded on the gross profit and eventually really the free cash flow which it generates. The only reason I flagged this out is because some of the pain which Southeast Asia or some of the pain which the venture industry in general and the skepticism it's facing today is because of mispricing. Private rounds were done on these GMV multiples, looking at future user growth, future spending growth, which was often subsidized. But really, as these companies made their IFRS and GAAP financials, the net revenue was a small fraction of their GMV. And as that started to come back to earth, global skepticism about investing in venture, investing in startup continued to grow. Now, some have already done meaningfully well over the last 2 years. That's why you see the stock markets have recovered. SaaS companies, internet companies, commerce companies have recovered. But I think more needs to be done. Venture investors and founders need to be more aware and more realistic to build more sustainably for the future, just so this ecosystem at Cyberport, but also across all of emerging Asia, continues to grow. Hopefully this has been useful. I apologize for my overly rapid English speaking, but hopefully most of this was useful to you all. Good to see you. Thank you.
Thank you, Yash, for enlightening us.